Hi, thank you so much for tuning in. What's capital gains tax? This is what I'm going to be addressing today. And it's very simple. Capital gains tax, which came into effect, I believe, in January of last year, 2016, in Kenya. It used to exist before, was done away with constitutionally and then brought back in 2015, but became active on the 1st of January of 2016, is basically a tax levied on your net profits from any property transaction. These are generally realized on liquidated profits, not equity. Equity is basically the difference between what you owe on a property and its value, preferably a market value, right? That gap is what is referred to as equity. It then becomes a net profit if you indeed sell the property for its market value. The government says that if you, for example, bought a property for R1 million in 1980 and in 2017 sold it for 100 million shillings, which, by the way, is very likely. In fact, the numbers are a bit more dramatic than that. But let's assume, for argument's sake, that this is what happened. You have, over the number of years since 1980, incurred expenses to do with maintenance of the property, whether it's painting, replacement of kitchens, security, doing up the yard, landscaping. All your costs related to the management of that property from 1980, when you bought it for 1 million, would be added into the cost or the expense of the property. They would then subtract that total value, provided that you have receipts, so you need to keep good records. They would subtract that entire sum or value from your market rate. So if you sold the property today for 100 million, let's assume that over the number of years you incurred maybe 10 million shillings in total to maintain and keep the property. You've therefore spent a total of 11 million shillings on that property. Your purchase price of 1 million, management expenses of 10 million over the years. Today you sold it for 100 million. You've basically made a profit of 89 million shillings. So the government says that you have to pay 5% as a tax of the 89 million shillings in order for that transfer process to be completed. Your seller will not be able to obtain a title to that new property they're buying from you unless you, as a buyer, first pay the 5% capital gains. Very simple to understand. You can also consult a tax specialist. Accountants, auditors, and lawyers as well would be able to guide you, especially those who focus on conveyancing property transactions. Please, please, please make sure you consult and get the numbers right, because you can get into serious trouble if you do not cover your capital gains tax. You get in trouble with a taxman, which is never a good thing. Besides which, it's just the right thing to do. So if you have any questions, feel free to reach out. Check out our website, www.goshenacquisitions.com. Make sure you subscribe to our YouTube channel and share it widely. We're happy to engage with you. And I will be inviting experts in these fields in the coming weeks and episodes to answer very specific questions for you. So please make sure you send those questions in. Be as detailed as possible. Send as many as possible so that we can hear it from the horse's mouth, as it were. You've been watching Own Land in Kenya. I'm Solomon Wangwe. Stay tuned for more information on strategic land investment.